And with that being said, Joe Biden and the Democrat Party are doing the blame game once again, blaming Donald Trump for what happened last week with Silicon Valley Bank. Now, before we jump into exactly what they're blaming them for, let's do a little bit of recap and a synopsis with what actually happened with Silicon Valley Bank. Well, on Friday, Silicon Valley Bank, a lender to some of the biggest names in the technology world, became the largest bank to fail since the 2008 financial crisis. By Sunday night, regulators had abruptly shut down Signature Bank to prevent a crisis in the broader banking system. The bank's swift closures have sent shockwaves throughout the tech industry, Washington, and Wall Street. The stocks of several regional banks plunged on Monday as well. The sense of panic abated on Tuesday, yesterday, at least momentarily, when bank stocks recovered some of their losses in early trading. Well, why did the bank actually fail, meaning SVB? Well, Silicon Valley Bank provided banking services to nearly half of the country's venture capital-backed technology and life science companies, according to its own website, and to more than 2,500 venture capital firms. For decades, Silicon Valley Bank, flushed with cash from high-flying startups, did what most of its virals do. It kept a small chunk of its deposits in cash, and it used the rest to buy long-term debt like treasury bonds, T-bills. Those investments promised steady, modest returns when interest rates remained low, meaning it was a very low-risk move for them to do this. But they were basically what turned out in the shorthand and short-sighted was that the bank hadn't considered what was happening in the broader economy within itself, which was overheated after more than a year of pandemic stimulus. Meaning, the Biden administration and the Democrat Party just pumped the economy full of trillions of dollars, and they weren't prepared for what was about to hit them. So this meant that Silicon Valley Bank was left in the lurch when the Federal Reserve, looking to combat rapid inflation, 40-year high inflation, started raising interest rates. Those once safe investments looked a lot less attractive as newer government bonds kicked off more interest, meaning that maybe they bought those bonds, say at 4%, and as the interest rates rose from the Federal Reserve, now there's bonds going for like 8%, so people are going to move over to theirs rather than actually buy up what's being bought at that present time, of which they have. The only way to move people back over to what they have would be to offer like a discount rate based on that bond. But not all Silicon Valley Bank's problems are linked to rising interest rates. The bank was unique in ways that contributed to its rapid demise because the bank's business was concentrated in the tech industry, which is Silicon Valley itself, and SVB started to see trouble when startup funding began to dwindle, leading its clients, a mixture of technology startups and their executives, to tap their accounts more. So they were rushing and pulling out more money, and the bank didn't have this kind of cash on hand. They had it all invested in the stocks and treasury bonds. And so when you have a large number of uninsured depositors showing up asking for their money and they're going, well, we don't have it, they had to get some sort of liquidity in those assets so they could actually give them their money. So to fulfill its customers' requests, the bank had to sell some of its investments at a steep discount. Once Silicon Valley revealed its huge loss on Wednesday, the tech industry literally went into a frenzy and panic, and the startups rushed to pull out their money, resulting in a bank run. By late last week, Silicon Valley Bank was in a free-for-all. The Federal Deposit Insurance Corporation announced on Friday that it would take over the 40-year-old institution after the bank and its financial investors had tried and failed to find a buyer to step in. The takeover put about $175 billion in customer deposits under the control of the federal regulator. The FDIC, basically created by Congress, was back in 1933, basically provides consumer deposit insurance to banks, is responsible for maintaining stability and public confidence in the nation's financial system, according to its website. So you would think, oh, well, who's to blame here, really? Could it be the management of SVB, which basically didn't notify their consumers or their clients with what was actually taking place in a very efficient way, so they created panic of what was going on? Or is it going to be Donald Trump's fault for what happened? Or could it be Joe Biden's fault for pumping the economy, the Democrat Party, with trillions of dollars of cash, artificially inflating the economy, and then having the Federal Reserve step in and having to increase interest rates? I mean, there's a lot of blame to go around. But what's being blamed here is, or who's getting the blame and receiving the brunt end of all this would be President Donald Trump, who signed a bill that reduced how often regional banks had to submit what was called a stress test by the Federal Reserve. So last week, as news of the Silicon Valley Bank's failure spread, some banking experts said that the Dodd-Frank package might have forced the bank to better handle its interest rate risks had it been rolled back. So obviously, as you can imagine, the Democrat Party and the Biden administration hopped on this real quick, very similar to what they did with illegal immigration, right? You got record illegal immigration. Is it Joe Biden's fault for removing Trump's policies? No, 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 no. Of course it's not. Of course not. It's Donald Trump's fault for that. Why do you have illegal record immigration? Well, it's because Donald Trump. It's not because of Joe Biden removing the policies or having a lack PR message regarding the southern border. Increased interest rates on just because or due to inflation. Whose fault's that? Oh, it's Donald Trump's fault. Is it Joe Biden's fault? No, not all. Is it Joe Biden's fault for pumping the economy full of trillions of dollars with COVID-19 stimulus checks, even though not everybody needed them? No, of course not. You guys, you'd be crazy to blame Joe Biden for any of that. Whose fault is it? It's Donald Trump's fault. It's Donald Trump's fault for Russia invading Ukraine. It's Donald Trump's fault for China wanting to invade Taiwan. It's Donald Trump's fault for North Korea, Kim Jong-un launching missiles into the South China Sea. Like, whatever it may be, it's always Donald Trump's fault. By no means is it ever Joe Biden's fault. Well, the Democrats, including President Joe Biden and Senator Elizabeth Warren, are blaming Donald Trump for the sudden collapse of two banks, Silicon Valley and Signature Bank. But Barney Frank, folks, a leading sponsor of the Dodd-Frank Act, sharply disagrees. The law, signed by then President Barack Obama in 2010, made significant changes to Wall Street regulations and federal financial regulatory agencies in the aftermath of the financial meltdown in 2008. The bill, though controversial at the time, was theoretically designed to protect Americans. So what are the accusations? What's being said here? Well, Democrats say Trump is responsible because he signed a law rolling back some of the regulations enacted by the Dodd-Frank Act. Biden, quote, "During the Obama-Biden administration, we put in place tough requirements to make sure the crisis we saw in 2008 would not happen again. Unfortunately, the last administration rolled back some of those requirements." So that's Joe Biden speaking, because again, he can't be the one to blame for any of this. Warren, in 2018, the big banks won. With support from both parties, President Donald Trump signed a law to roll back critical parts of Dodd-Frank regulations. It's true that Trump did sign that into law, folks, but what Biden and Warren failed to mention is that rolling back the regulations had widespread bipartisan support. In fact, 17 Democrats from the Senate and 33 House Democrats supported the bill, demonstrating that it was hardly one-sided effort there. So Frank is saying this, and he was actually quoted in Politico. Frank said he doesn't think that 2018 rollback had any impact on the failure of the banks. "I don't think that had any impact," Frank said. "They hadn't stopped examining the banks." Frank is no partial analyst. After all, he sat on the board of the New York-based Signature Bank until Sunday when it was shut down. But his perspective is strengthened by the fact that he does not believe the rollback of regulations he helped craft contributed to rapid downfall of Silicon Valley Bank and Signature Bank. More from Politico regarding this. Frank, who served as Signature's board since 2015, said his bank was in good shape, but was hit with a run generated by the nervousness and beyond nervousness from SVB and crypto. The bank's digital assets business made it the unfortunate victim of the panic that really goes back to FTX, the cryptocurrency exchange that failed last year. So basically what he's saying is people were freaking out of this whole thing, very similar to what they did with SVB. And by the way, it was also people talking into their ears of, you need to pull out because this bank is about to fail. So everybody rushed to it, which just made the matter worse. And like I said, the management at SVB probably could have done a way better job in their public relations of notifying their customers of what they were about to do, of liquidating certain assets so they can actually give people their billions of dollars that they were requesting. There's no way they're going to sell that type of asset that quickly. I mean, they were even trying to dip into their stocks as well, just to get as much cash as they can on hand to give people what they wanted when they were streaming to the bank. And so as you've seen, they don't have the money on hand. And so who they got to blame? Again, it's Donald Trump. I know I'm repeating myself, folks, but it's just amazing to me that they're going to sit there and blame Donald Trump for all this. And you had Jen Psaki on MSNBC's Morning Joe saying that we should all be excited and ecstatic that Joe Biden woke up at 9 a.m. and actually talked about this thing. No, folks, I'm not kidding. Let's hear it from the horse's mouth.
And that's what people need to hear from him. Now, it's important to note, President Biden does nothing at 9 a.m. He is a night owl. So the fact that he is doing this at 9 a.m. anyway speaks to how vital the White House recognizes it is for him to have his voice out there, conveying that to the American public.
Wow. It's such a big deal that Joe Biden had to wake up at 9 a.m. and get some work done. And not even get some work done. He just had to talk about something. It's a big deal. I mean, the bar is so low for this guy, it's head spinning. I mean, he hits a golf ball backwards. He fights with his teleprompter. He doesn't know his own name. He doesn't know his wife's name. He doesn't know any of his staff's name. He doesn't know where he's going at times. He gets lost, has to be ushered around by the White House Easter Bunny. We've all seen that clip. He gets lost going to the Oval Office. He falls up a flight of stairs multiple times. I mean, it is outrageous the fact that we're supposed to get excited when the president wakes up at 9 a.m. and talks about a national issue. It's just amazing to me that Democrats still voted for this guy, but he's the most popular president in history, supposedly. Yeah, as if anybody actually believes that.
I hope you enjoyed that clip from the Bald Brad Show. If you did, make sure to hit that subscribe button so you can stay up to date on all our future content.